Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the micro bearish scenario where we are still expecting a continuation to the downside in a wave 3 after we have a wave 1 finished, wave 2 and now then a bigger wave 3 to the downside. Now wave 3 is usually the strongest and most impulsive wave in an impulse, meaning that you really want to see volume pick up while price is moving towards the downside. And at the moment you can see first of all that price is taking a very long time to move to the downside. And also the volume that we have over here is not too impressive for a potential wave 3. So if price would move to the downside, you really want to see high volume coming in as well. The potential support area over here that then has to be crossed is sitting between 29.6k and 29.7k. But if this is going to be a wave 3, it shouldn't really be a problem. Now what you also see is that on the chart we then have a potential wave 1, 2, 1, 2. And as you can see, the shape of this double 1, 2 is usually not really something you like to see, as usually you want to see some sort of a diagonal where you then have a wave 1, 2, 1, 2, and then eventually you move to higher prices where the second wave 1 is taking the high of the first wave 1. So this one takes the high of this one. In this case, then the low, meaning this second wave 1 would then take the low of the first wave 1, but that is not the case. So all of this looks quite corrective at the moment for then a higher probability of at least taking the more local high. This wave 2 did bounce over here at the golden pocket, taken from the high to the low of 1, which is the most common target area for a wave 2. But then again, where is the impulsivity and the high volume? That is over here currently the big question. If we then look at the more bullish scenario, we can label this as a wave A or potentially a WXY, but at the moment I have it as a wave A over here, followed then by a wave B, which is either already finished or still maybe one more low around this target box, and then you'd be looking for a C to the upside. The reason I say that maybe wave B could have one more low is that this structure could be a 535 in a potential zigzag, or of course wave B is already finished. We have really big bullish CVD divergences building as well, so the probabilities therefore are also a little bit higher towards the upside. So either then B is already in and we are going to be looking for upside, or a 535 where then this support area is going to be very important. Now if price decides to move to the upside and the low of B is in, the first area of interest for me is going to be this target area over here, where the target area is between 30.1k and 30.2k as potential resistance. And we also have a order block over here, which is this white area, the two green candles maybe on your chart, gray in my chart, which is between 30.1k again and 30.3k. So that can act as resistance as well if price is moving towards the upside. But still, potentially this over here is on the cards, especially looking at the volume as well. All of this looks a little bit more corrective at the moment than a big bullish or a big bearish wave 3 to the downside. If we then look at the CVD divergences, we have very big bullish CVD divergences over here that are building. And something I at least want to show on the chart as well is the bearish CVD. So you can see on the chart the yellow line, lower high on price, but a much higher high on the CVD. But what happened is that you can see this peak over here, this very high spike on the yellow chart, which was for this little red candle. So you can see that actually between these highs and this, well, whatever it is, like 1 50-minute candle, we had bearish CVD divergences, but that one played out as then we got another red candle to the downside. And because we had bearish CVD divergences with this high over here, this CVD divergence that we have here is a second CVD divergence, as I like to call it, with the same pivot. So the pivot is the high. The first CVD divergence was with this candle, which played out, and this is now the second one, as we then got the higher CVD line over here. So again, lower high on price, higher high on the CVD. And the more CVDs you get with the same pivot, the lower the probability is of that CVD playing out. So a second CVD divergence has lower probability than a first CVD divergence. So that is at least something to write down, or maybe at least to remember. And if we then look at the bullish CVD divergences, you can see over here higher low on price, lower low on the yellow line, as well as the blue line actually. So we have a bullish CVD divergence and it just kept building, especially the yellow line over here, price moving up, yellow line moving down. incredibly quickly as well. It almost makes me feel like, yo, is this a leading CVD or is this a real CVD? You know, that's how quickly it actually moves to the downside. If price would move to the downside, potentially to the blue target box over here, then the blue line will very likely create bullish CVD divergences with the actual low that the red candle here has. So then we have a higher low on price, maybe yet to be made, and then this blue line will create a lower low, because as it stands now, the blue line with the actual low over here just missed out on creating a bullish CVD divergence. It does create a bullish CVD with this little range over here, for this being a higher low on price, lower low on the CVD, same for yellow, but just miss out on the actual low of this range. And more locally, you can see higher lows on price, lower lows on the CVD. So very bullish CVD divergences. Maybe we get some sort of a structure either side to the upside or the downside just before the weekend hits, which is basically the same as I believe we got here as well, as this was also here at Friday evening for me, Central East European time zone. Just before the weekend hit, we got a very impulsive move. Before then, we started ranging throughout the whole weekend, as the weekend is known for its ranges. So potentially we can have a big move in either direction. So please watch out where you are trading this, because if price does this, you know, you don't want to, even though there might be support and bullish CVD divergences, always make sure you have your plan, you have your strategy, you have your entry requirements for a potential trading setup, trading scenario. And only when you see what you want to see, you can enter a potential long, right? Same over here if you're looking for shorts, or even higher up in case price might go higher, right? Everything is the same. Stick to your plan. So if we look to the probabilities, then currently for me the probabilities seem higher based on CVD and the Elliott Wave count, that we might find a way to the upside, either directly to the upside or potentially in a three-wave structure where we then find support over here and then a move to the upside. Of course, when we think about time, especially in my time zone at the moment, time is running out. Only a couple of hours till the markets are going to be closed. So preferably you're going to see a big move before, in my time zone, 10 p.m. So in the upcoming 2.5 hours basically before New York is finished. So going down once more and then up, it has to happen very, very quickly if that is the case. But yeah, at the moment, based on the CVD, based on the Elliott Wave count, it seems a bit more likely. Just remember, if price is going towards the downside on high volume, beware of the bearish scenario, right, where we can move towards the downside. So if price moves down towards this area, observe the reaction and then decide, of course, what you're going to do with your plan. So that being said, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.